All right. Working on trying to get this up correctly. Obviously, first time doing this on YouTube, but it is work in progress. Hey, if you're joining me for the first time, well, obviously it's the first time because I've never done this before. We're going to be going over the PM session. We are at 12:30 on the 12:30 p.m. on the Nasdaq, and we see it moving right now. So we're going to be watching. We're going to use ICT concepts to make some trades today. Actually, when I say make some trades, I'm really looking to only take one trade. So one trade, we're looking for a market maker model. I would like to see it to the sell side, downside. We've had a lot of movement higher. We've hit a level of resistance or a level of imbalance on this 1 hour breaker. If we go to the 1 hour, you'll see this right here. We are in this imbalance right here, and we either are going to break through this imbalance and head to this high, or we're going to turn right here, and based on the 5-minute, it looks like we've already broke through that market structure shift. So with that, I'm looking for a downside move. I'm looking to find a breaker here to trade. We've got some movement. I like this. That's a lot of movement. I don't want to miss the whole thing. Grab some of this liquidity right here. Let's see if we can pop back up. I'm going to see. I don't like the 1 minute as much. Let's see what the 2 minute looks like. Here's that. A lot of wicks up here. Nothing I really am convinced on. I just know that this right here is the market structure shift. Why do I pick this one and not this one? And I say this one because this is the low that created the equal highs. I don't like that either. We got equal highs here. So that's too smooth. That's going to be broken at some point. It's usually not in their interest to leave equal highs. They want retail to think that that's resistance. So retail will place their stops here. And we could see price come right back up to this level and break it. That's very doable, especially since we didn't break this low right here. Thanks, Matt P. Jesus is Lord. Amen. And he's given us the ability to produce wealth, and that's why we are doing, this is my mission, why I'm on YouTube, why I'm learning how to day trade, because I feel a conviction in my heart to teach the body of Christ to become independent, financially free from their dependence of an employer. And that's what we're going to teach and show how to do today. All right, I'm going to put this level here. I want to see how we react to this level right here. It's an aggressive candle. We got a really small fair value gap right here. And if you can't see some of these charts, guys, and it's a little blurry, if you go down to the gear icon on YouTube, you can change your settings to change for a higher resolution. So you might be on 340, you can put it to 1080, and that will give you clear resolution. All right, this is really bullish. And like I said, we have these equal highs here. We didn't break this here. I really don't like that either. I would want to see that broken and then an aggressive move. And that today's a day with no news. So day with no news means we could see a lot of choppiness. We could see price not respecting PD arrays, discount PD arrays, and premium PD arrays. So it all depends on the timing of the market. And I only like to trade in the last 15 minutes and the first 15 minutes of the hour. This is typically when you see macros happen. Macros are signatures in price action and a set of instructions that are given to the algorithm, which runs the market, which runs price moving up and down to run to a specific point of liquidity. And right now I really like these equal highs. There's just not an entry model for me to get in to take these highs. So we're just going to read price and see how it goes. We inversed this small fair value gap here, took some of the liquidity here. So far we've made a balanced price range, BPR, and we should see this push through to the highs. All right, I'll be right back. I can use All right, we're back. And we are seeing this price push higher. It is pretty aggressive. It's probably going to run for these equal highs here. I mean, this is such a small fair value gap. I don't like that as playing for an inverse. And there's really nothing else. There's this 5 minute that closes in 3 minutes. So I do like this 5 minute. Maybe we could look at that. But my guess is we're probably going to get there before. Yeah, nice LRLR, low resistance liquidity sitting right here. Probably going to run that. We got a minute 30 before we break this 5 minute. I just want to make sure that's what's going to happen. We have a low, high, lower low. We just broke that. If we come back into this 1 minute fair value gap, that could be viewed as a breaker towards this high side, buy side. We're just so high in premium. I really don't want to go long. I would prefer going short. Look at that. Holy cow. Let's see what happens here. This is why I didn't take long before that 5 minute. Got a little bit of some action going on right now. Look at that candle. That, as long as we don't retrace and lose the girth of that candle, that's some movement. We're getting, it's 11:44. We got 10 seconds before the last 15 minutes of the hour. It's where I like to start seeing setups. It's where I look for my model. It's the highest probability area where I begin to see price actually move. All right, so what do we got? I'm not doing anything in that. But, I mean, this is a big signature in price that we're going to move lower. I mean, we have this 5 minute right here where it moved up, took the liquidity, and closed below that 5 minute. I mean, 250, 10 handles. Stopped at this fair value gap here. I want to see if it wants to hold it here and then move higher. If that's the case, this would make for a nice inversion setup that we potentially could go higher from. Again, I want to be bearish. I don't want to go long. Only way I would go long is if the candle is convincing enough. There's enough momentum. We close relatively quickly above this. And then I'd target these these highs here. These highs want to be ran, but I want to see how price supports this. Let's get rid of these. Well, did we just close below that? Almost. Closed it to the tick. The close of this candle is 42.50. The high of that candle is 42.75. So one tick off. We could just run right through this. Next area would be consequent encroachment of this wick. Somewhere around right here. I want to see how it reacts to that. We got this order block it's bouncing off of too. Alright, close below there. Good chance we're probably going to run these lows. The only reason why I'm not totally convinced is right here. We got a 5-minute breaker. Could come back down into this breaker, which we did one time. We came down to the tick, as you can see right here. Beautiful price action. And the breaker is right here. We have our low, high, and a lower low. And then we come up. We're going to bounce off this high. We could do the close of this bullish green candle on the 5-minute. But it looks like it doesn't want to come back down to this price action right here is balanced, and it only needs to come back down to this level right here, which is the breaker. A higher time frame breaker. Let's look at the 15-minute here. Looking at it off screen. There's just nothing. Nothing that's clean. I'm not going to waste money trying stuff out. I refuse to do that. I've done that too much in the past. Too much in the past. I've just wasted money. Tried stuff. Nope. Hey, if you're joining, we are doing the PM session. We're looking for price. I'm looking for a reversal at the moment. But we have price has been consolidating in this area. Now we're starting to see it break lower. However, there's not really an entry model for me right now. We have these equal highs here. We do have a high as far as the bodies. We have a low. Higher high as far as the bodies, and now we're just breaking this low right here. So it tells me we're actually beginning to see market structure shift on a higher time frame, that is the 5-minute. It's not the biggest time frame in the world, but it is price. Yeah, that's just, I can't do that. Not my model. It's not, I mean, it's too aggressive. It didn't grab it here. They're asking for the deposits, but I know you guys don't have them, so I'll let them know. Period. I do need the leases when you can get a chance to get them. Period. All right, let's see price. Let's break a little lower here. I want a fair value gap to form right here. So 10 minutes. Come back up into this. I would look at that. I would like that. We just got to be patient, not rush it, not jump into anything beforehand, people. Got to wait. Trades will come to us. And if you don't know what I'm talking about, I'm looking at this high of the body. We have this set of bodies. We have this low. And then we have this higher high as far as the forming of bodies. Now, my model that I trade is the breaker model, which its signature and price is looking for highs, lows, and higher highs for a price to come then down, break below that low, and then come back up into it. Now, if we have a level of, I'm going to take off this breaker because I think we've hit that. If we can have an overlapping fair value gap, that makes things very attractive for me. So ideally, what I would like to see is this 5-minute fair value gap stay open. I do not want price to go any higher, as we can see right here, and it's moving a little bit, but I want this to stay open, this whole area. I want it to break lower without me. I'd like it to break lower and then run into here. Somewhere around there. If we run into somewhere around here, I know we haven't gone down too low. We have some fair value gaps that are sitting below us, but it could give a reason for it to bounce back up into this fair value gap. And the more we chip into this fair value gap, the less I like it. We got 3 minutes left. We could also just hover right around here for 3 more minutes and then pop into this fair value gap right here. And I would look at that as a potential short. I do like that idea as well. But ultimately, we are at the end of the lunch hour. which is good. In the sense that it's good for something to happen, something new, something. Ah, dang it. We're eating into this fair value gap, man. It could, if it really wants to move, it could go without us. It doesn't have to. Technically, we've hit a mitigation block right here. This is a mitigation block. High, low, lower, high. Also could be viewed as a break. You know, this is higher. I'm not going to take this. I'm looking at the swing high. All right, we close that. If we are still bullish, this is a nice breaker right here. That's the thing about the breaker model, is you need to know the draw on liquidity. And right now, it looks bearish, but we absolutely could bounce right here and continue this aggressive streak we've been seeing the past 1, 2, 3, 4 days. All right, so we've grabbed liquidity. If we are bullish, let's talk about that. We do have this breaker. We found some support. We took liquidity on the sell side, and now we have broken a smaller level of right here. This is a 1 minute market structure shift. Like to see it not take this high right here. Okay. This is the breaker I'm watching right here. It's probably going to leave us. We have a higher time frame. Right here. I like this one better, actually. We're going to look at this one. Why? We have a low, high, lower low, and this is the one that made the low. This did not make a lower low as far as the wicks go. So we're going to shift our thesis here. I want to see how price reacts here. We also have this fair value gap right here. within the breaker. We also have this fair value gap above. I do like that. Let's see how it reacts here. I don't want to miss this because it could just push higher really fast. I don't. I want to see it not close below this. I would like it to close above the 50% in 4 seconds. No, I'm not liking that. It absolutely could go the other way, but a signature and price that I like to see is only half of that fair value gap be used. Right now, this fair value gap has fully been utilized. It absolutely still could go higher, but I'm going to need to see more price action to support my thesis of it moving higher. We're also redelivering off of this 1 minute fair value gap as well. I would like to target this low resistance liquidity. All these are buy stops sitting above these. We're also in the time frame that I'd be looking to take my trade, which is in the last 15 minutes and the first 15 minutes of the hour. I also have this low body, lower low for a body. That could be viewed as a breaker as well. At this point, my thesis is kind of switched. I really want lower prices. That's what I've been wanting. Because we just are so high in premium. If I pull this 5 minute out, we look at this range here. We have this swing low to this swing high, and everything above this 50% is premium. Anytime you're in premium, you want to look at going short. Anytime you're below this 50% line of a specific range, this is a larger range, you want to look at going long. You could also take this and put that here and see how that lines up with this breaker. See how that 50% lines up? That's what I love. I love when you have overlapping PD arrays or things or signatures and price that overlap, and that's what's happening right here. You can see this is a breaker on the 5 minute. We have a low, high, lower low. This line right here is my breaker for a long move, but I don't like the idea of going higher. But we could wick down into discount in this higher time frame 5 minute breaker, and we could actually go higher because we tapped into discount for a move higher. It all depends on the higher time frame bias. So if you have your higher time frame bias incorrect, it can affect your ability to get a larger move. You can still set up breakers and take trades that are not in line with daily bias. You just could get stopped out a lot easier. So we look at higher time frame analysis to really help us determine what the direction of the day could be. We've just have found this resistance on the higher time frame. There, if right there, that's a 1 hour BISI. 1 hour BISI. That's a 1 hour fair value gap that we rebalanced on the 1 hour time frame. So I know my gut is telling me we want lower prices, and that's why I'm looking for lower prices. We also, don't have very high conviction today because there's no news. Typically on no news days, we get indecisive price action. Does price want to go higher? Does it want to go lower? No news days are typically days you want to do lower size trades because you could be wrong. You could make a trade and it could be wrong because there's just no news. There's no conviction in the day. So those are my thoughts right now. I'm still waiting. I got 7 minutes, 8 minutes left before the end of my time that I want to look at taking a trade, and then I'd have to wait till 2 o'clock, which is 2 o'clock or 1:45 to 2:15. Just a lot of junk going on. You can find support here. For the most part, we have respected this breaker. Just don't like it. Low conviction. See what the 2 minute looks like here. We already delivered on 2 minute right here. So we got a low, high, lower low. We break that and we found support at this 2 minute fair value gap. So theoretically we could see higher prices at least to this wick high. If that's the case, I could get in long here, but because it's a no news day, I just don't have that much conviction on the trade idea. But we can use this for education. You see this right here, this is a volume imbalance. Price could theoretically wick down to that level as well. But we have this 2 minute fair value gap here that price rejected strongly and turned into a green candle. Let's look what the 3 minute looks like. 3 minute, you got a fair value gap right here too, so you got overlapping time frames for this potential move. It looks like it's going to play out. Two minute has respected the breaker right here. This is a breaker bar. So we have a low, high, and the lower low right here. When you have this lower low and we come and we break this, that's a signature on price that price is potentially moving higher. I just don't have the conviction, so I'd rather wait for a higher conviction trade idea than gamble and lose. That's just the honest truth. I don't feel conviction that it's going to play out. So you got Just too many times have I taken trades on a half-baked idea and ended up losing money as a result. I'm not interested in that anymore. The idea is playing out right now. I'm expecting it to hit these highs right here. Just, I don't want to do it. That's what I'm looking for it to hit. If you're joining for the first time, well, it's the first time I'm live streaming. Thanks for joining. Say hi in the comments. You got questions, put them in there. I'm happy to answer them or chat up. Right now we're watching price move. The trade idea that I had was a breaker breaking towards these highs, but it's a no news day. I don't have as much conviction about it. So we're just watching price move and see if we can read price and where it wants to go. So right now we found support on this 2-minute. You see this 2-minute fair value gap right here. Nice and pretty. Oh, no, that's actually not a 2-minute. There it is. There's the 2-minute, and the 3-minute is what that was. It bounced off that. We have a low, high, lower, low. So we have a breaker. As soon as it hits this, it turns from a breaker into a model 22. So this model 2022 is an ICT concept. I didn't look at the 2-minute time frame to see if it was going to hit it. If I was down here, may have considered taking it, but more than likely we're going to run this high, and I mean, potentially we could be running this low resistance liquidity for higher prices. I don't like the idea of higher prices though, because this blue box here is on the 1 hour time frame, and it's a BISI. It's a 1 hour fair value gap, which we could see price just stop and hold right here and then want to move lower. So ideally I want to see and take a short. That's really what I want to take. I'm not interested in longs, but we could see price play out to the upside. So my bias, the reason why I'm not in the short or in this long or playing to the upside, is because I have a bias in that I think prices are going to go lower, and I could absolutely be wrong. Absolutely be wrong. I've been wrong before. But let me just show you here. I'm going to pull up the 1 hour right here. So this is the 1 hour time frame, and this 1 hour fair value gap goes all the way to over here. So see this low and this high that creates this 1 hour fair value gap. The reason why I think it potentially could go higher is we have another 1 hour fair value gap and buy stops. These buy stops is where short sellers are putting their stops for this move lower, and if price decides to come back up and tag those, well, that would be a reason for price to want to move higher. I just am not 100% convinced that we're going to do that, and we absolutely could. I don't know. So I need more information, need more details to pan out for me. This trade is still in play if you were in a long or you were biased to the upside. Entry would have been at this fair value gap on the 2-minute. Target would have been this high. So on these streams, I will be trading ICT concepts, and everything that I talk about is from ICT and his ICT concepts. So look at that. We're now, the stop would be at break even. You would be stopped out right here if it breaks below this fair value gap. This is why price should have ran up here, but it didn't. And look at that, it's tagging it again, which is not uncommon for the Model 22. So it could tag here and then keep going. That would have been another potential. I'm just very likely to not take a gambling trade. And with a no news day like it is today, it doesn't make sense to put your eggs in a basket that has a 50-50 shot of it not working out, you know? I need cleaner price action for me to want to take a trade. And ultimately, I want it to go lower anyway. We're not seeing the setups and the price action that I want to see. If you're on the stream, tell me where you're streaming from, where you're watching from. Love to chat with you guys. Trading can be boring. Trading can be lonely, man. You're in a room all by yourself. So chatting with other people is always nice. Look at that. We closed above this 2-minute fair value gap. We wicked down and we tagged that volume imbalance. I mentioned that earlier, that we could tag this volume imbalance. We did, and we closed above this fair value gap. This is bullish. If there was a fair value gap, I would have a little more conviction to actually play this. This right here, we have 15 seconds for it to close above this right here. Yeah, I'll play this. Let's wait. I want to see it drop. Don't go without me. It could just push right here. It's going to. I don't want to take it. Shakaraba. Yeah, it's just gonna, if it tags this fair value gap, comes back and tags it, I may look at that, but it could just push right through this. I need to get me back into discount. Discount's right here. Discount's right at this level, from this high to this low. If it tags me back into here, that might be enough for me to consider taking a long here. It's just too high in premium. I've tried to chase these before, and the negative to chasing something like this, there's a good chance this is gonna work. I'm pretty confident that we're gonna hit these two levels. But going in right here, price could retrace all the way down here, and you could be down 5 to 10 to 15 handles, depending how high and the size of the fair value gap, that you just end up getting stopped out because of the volatility. So in my more mature trading years, I'm starting to wait for it to come back down to a level of discount and then push higher. So see, we should tag these. Very high probability we'll tag them. I just don't want to get in it because it could just drop 10 handles and then I'm stopped out and then I miss the move. So just from so many mistakes before, I'd rather wait for a drop, and if I don't get the drop, I'll miss out on the trade. I'll miss out on the trade. And it's not my ideal trading time either. We're at 12:22. We're not in the middle of a macro either. Macros are, the reason I like to trade macros is because macros, or usually between the last 10 to 15 minutes and the first 10 to 15 minutes, tend to have an algorithm that pushes price in a specific direction. Not in all cases. There's the tag right there. We just hit it. Boom. Now we may not continue. We could just come back down and we may continue. That's the thing about it. So that was the trade. It was already too high. I mean, the trade idea was the inversion of this fair value gap right here. The reason why I liked it and I became interested in it was for two reasons. We ran this liquidity here, this wick. We also tagged this volume imbalance right here. See that space between this candle and this candle's close and this candle's open? Well, I mentioned about 20 minutes ago that there's a good chance that price could come down and fill this imbalance in. Well, when price came here and filled this 2-minute imbalance right here, this is the 2-minute chart, I said, well, it doesn't have to come down here, but it could. So we come up here and then we come back down. We wick down here to fill this volume imbalance, and then guess where we closed? We closed above this 2-minute fair value gap. That was right there. I knew that we were bullish, and I went to the 1 minute to look for a volume or a fair value gap for an entry, and that fair value gap is right here. Now we want to see a close above it, but look how high we closed. That's just too high for me, where price could come back down into this area again. I mean, it's only 4 to 5 handles, so it wouldn't have been that big of a deal. But the principle is still the same. We closed really high, and I prefer to target at least 10 handles. So this is sitting at 18,246 right here. I would have want to hit 18,256. 56 would have been up here, which we did hit it, but it just wasn't close enough to this swing high right here for us to potentially play that move. And now, so we missed that opportunity. Though that's the signatures, and this is why we watch price. This is why, even though we're not making a trade, we're looking at potential opportunities so that when we see it the next time, we have a more conviction in what we're doing. Las Vegas, Honey Roy. Is it the morning there? I guess it could be. It's only 12:25 here, so I guess it's probably, what, 11:30 there? ICT is the man. That's where I learned. I traded a year before that, and I basically was gambling. I tried different people's stuff, but nobody could really teach me. Nobody could educate me as far as why price did what it did. So about a year ago, actually April 15th is when I was introduced to ICT, and I was blown away, and I've been studying his stuff ever since. And it's legit. I mean, he explains why price does what it does. Now, I mean, it stops here. If we want to see price stop here from going lower and push higher, because this area is balanced. If it's going to move, it needs to go now. There's no reason for it to come all the way back down here. But it could. Especially since it's a no news day. No news days are just notorious for not giving good price action in it. And that's why I haven't made a trade, other than I made a dumb trade earlier. Just a quick one. This was the 1157 fair value gap, and when we broke above this right at noon, I'm like, okay, we're at the top of the hour. Usually that's enough momentum to actually go for the stops. Go for the stops that sit here, here, and here. Well, it didn't. I got in high. What I was just telling you, I did. I got in closer to here, and guess what it did? It retraced all the way back down, still within this fair value gap. It still respected it, and then it came back up and made an equal high, and I would have gotten my trade, gotten my win. But because I got in so high, I got in at such a high level, the retracement is what stopped me out. This one is a momentum play. It's one of my models that I trade, but in this case, it just didn't work out for me. All right, we either turn here or we're going to run these. And my bet is we're running these because we have these equal highs right here. These equal highs are typically ran very, very often. So I would not want to short unless we hit these equal highs. So honestly, what I would like to see, I would like us to hit these equal highs, and then I would look for a short in the PM session. That is ideal. That'd be ideal. Why? We grab the liquidity here. We're already in premium in a higher time frame. There's a higher probability that we could go lower. You know, to be honest, it would be nice to be in Las Vegas or somewhere on the West Coast. You can trade early in the morning, and then, man, you got the rest of your day. Markets close Central Time. I'm in Nebraska, and they close around 3 o'clock Central Standard Time. But dang, that'd be nice. Do an AM session. Start trading at 6 a.m. Is that what it would be? Yeah, 6:30. I could do that. That'd actually be nice. Only downside, it would cut into the morning routine with kids and everything else. Okay, so could we turn right here and head the other direction? Yes. We've grabbed liquidity. We didn't grab all the liquidity, and we could begin to move lower. The market structure shift would be right here. I would like not to see that break, and I would like to see these highs taken. That's what I want. Yeah, we're going to run these right now. We're going to run these equal highs right here. Once we hit these equal highs, I'm going to begin looking for a bearish breaker to go short, and it's potentially lining up. Ideally, I'd like to take these between 145 and 215. That's going to be the 2 p.m. macro. And the reason I like micros, I've said this multiple times, it's just a higher probability that prices run when you're in that macro. It's not just going to fake you out and go the other direction. So that's why I look to trade in the macros. Grew up in New Jersey. Yeah, I mean, New Jersey seems really congested. High energy. A lot of action. I actually followed a guy on YouTube that traded, was from Jersey. Can't remember his name. I did take a trade. Audibuzz 08. I took an inversion model. There's the high right there. That's what I want to see. Now we want to see price actually ideally not break higher above these equal highs. I'd like it to stay. If we could close below it, that'd be ideal. We got 11 seconds. That would be a great signature in price for lower prices to come. Look at that. I like that. Let's see what it does here. Okay, that's good. So we have this, we have a high, low, and a higher high. Our market structure shift is going to be right here. I want to see prices drop below this to tell me price wants to move lower. Could it move? Could we see it right now? Yes, this is one of the signs that price wants to move lower, closing below a high, a previous high. Not only that, it was equal highs. Price wanted to come up and grab the liquidity sitting above these equal highs, and now potentially it wants to run the other direction. I'm just not ready to fully commit by going short right now that price wants to go in this direction. I'm just not that advanced. But this bearish candle right here is a great signature in price. Now the thing I want you to look at right here is this potentially could move very quickly lower. Okay, see that? I like to put a measuring stick right where the high was made and where the low was. So this leg of price action right here. Potentially, we could see price run for this low if we're in the macro before we hit this point right here, before we hit 1346, which isn't in my favor because I want to wait till 1345 before I make a trade. But what you tend to see is markets are symmetrical. These price runs are symmetrical, and sometimes even the sell side runs faster. So here we go. We got that right here. This looks good. I want that to go a little bit further. So I'm looking at the lowest closed down candle, and that is this one right here. So this is the breaker, and this is 51, 52 to 57. That's really small, so that's great. Low risk because I want price to stay below. I don't want any closes above this box that I just created. Technically, I could get in this fair value gap and you could go short right here. But we're at 1235, so it's outside of the rules that I want to abide by and not take a short. But you could take a short. You could have entered right there, and that would have. This is probably going to work out. It's probably going to bite me in the butt by not taking this. But I'm trying to be extra careful because it's a non-news day. Price literally could do anything. I've seen it just be crazy. So I want to stick within the rules that I set for myself so I don't hurt myself. Unless it just looks so good. This looks really good. Oh man. Oh, that looks really good. Look at this. You got another. Look how price ran from this level right there. Look how it touched it. I mean, look at this. To the tick. This close, this down closed candle. Look how it just touches it. This is probably going to run. Honey Roy, so if I understand ICT correctly, it just took out external liquidity and now it's looking for internal liquidity, right? We just took external liquidity and it could run for internal liquidity, and that internal liquidity could be anywhere down here. It could run if it wants to go higher, then yes, it will stop at a level of internal liquidity, which would be right here. If price wants to move higher though, that's only if price wants to move higher. It could stop here and then run higher because we grabbed external liquidity. Now we're grabbing internal liquidity. If price wants to reverse, it's going to blow right through this internal liquidity and run lower. And this is on a 1 minute time frame. If we go to a higher time frame, we go to this is the 5 minute right here. Let's go to the 15 minute. This is our last leg here, from this low to this high, and we already ran for internal liquidity here, and we just hit external liquidity by running higher right here. Now theoretically we should still be pushing higher, but it's not doing that. It's wanting to go lower. Man, I really like this. I'm gonna take this. I'm gonna set my stop.
Order submitted.
We're at 53.43. It's 10 handles. That would be my target.
Submitted.
I have this relatively close because we could just blow right through it if we want to go higher. But this is what I like to see. And we could push up higher still and wait till that 45 macro. Once we hit this low right here, I'm probably going to move my stop to break even because I just don't know what price is going to do. Right there. Once we hit that low, I'm probably going to move this buy stop to break even just to protect myself. And this is my target for 10 handles right here. We could just push right back up because we aren't in that macro. I see this happen too often. If we're before the macro, it will not go all the way down. It will not push lower. It will just reverse and consolidate until we hit that macro, and then it starts to run. And so we could see that happen right here, which is why it would be nice for it to just run right now. That'd be really nice. Come on, baby. Give me 10 handles right here. Come on, there it is. That's what I'm talking about. That is what I'm talking about right there, baby. And the reason why I didn't hold this, guys, I could have held it, but we're on a no news day. And on no news days, I am a scalper. I'm scalping 100% of the time. I'm not going to try to hold for these massive runs. I want to get in and get out, and man, it's a relief to hit it and then quit it, baby. That's nice. That's nice. That just looked too pretty. I mean, it just looks so good and it's so enticing not to. We're not in that macro yet. So theoretically, what could happen? And I want to talk through this. We could stop right here and not run these lows. Okay? We could not run these lows right here. And it would be very plausible for us to instead, I'm going to get a drawing tool because I want to show this. Right now we came down here. We could turn right here and run back up to this breaker. It could be in the macro time, and then we could run to these lows. That is what potentially could happen if we don't push right here. If we don't push right here, we aren't going to go to these lows. It has to push right here. If it's going to just wiggle around, higher probability that we come up to this level right here and then run lower. And that's what we're going to watch for. That's where, now that I'm out of the trade, I'm not getting back in. I'm going to wait and see how price plays out. just so I can educate myself. I want to learn, and I want to watch price and see how it handles before the macro and then during the macro. So it would be nice to see price to come up here. If it did come up here, I would be really tempted to get back in and go down again, to be honest. But I'm not going to get in here. We're already in discount. I'm not going to short in discount. Now, we could just blow right through all these lows, and we could target this level here, which is 50% of this higher time frame range. But we're going to see how price plays. Hey, if you got, as long as you're at break even, man, as long as you put your stop to break even, that's honestly what I would do if you're still holding. Because at that point, it's a no risk trade. I'm not a fan of holding on no news days. I've done it and I've seen my profits just evaporate. So we did hit that low. That's nice. That was the move right there. See how most of you guys weren't here during this time. Look how choppy this is, just up and down, back and forth. Yeah, we have some, but we didn't have anything clear. But right here, this is what triggered this idea. We hit these equal highs. These equal highs now give me higher conviction that if my setup shows up, I'm going to take it. That's the model that I take. We hit these equal highs. We have this fair value gap right here. So let me lighten this up here. That is the breaker. This is the breaker box right here. But what I really like to see, I like to see a fair value gap to the left of it. Come on. I like to see a fair value gap to the left of the breaker. So you see price goes higher and then it comes back down and it fills in this fair value gap and then pushes higher. Immediately, I'm looking at this level right here. This is the market structure shift level, but the breaker, so that's the market structure shift. This is the breaker. This is the breaker. It's the candle. It's the bearish candle. The bearish candle with the lowest close. So this is the breaker right there. So we see price go low, go higher. We come down a little bit. We don't break this. So I'm like, okay, we're going to sit here and wait. And then guess what we do? We go up and we run these equal highs. These equal highs are what trigger my mind to start looking for short, because we swept liquidity right here. And now we have, in my mind, the algorithm has permission to move lower because it grabbed liquidity. Now it wants to distribute that liquidity to the downside, which smart money is in this short. So when price comes down and then breaks below this swing low, I'm looking for price to come into this breaker, and that breaker is this breaker box right here. Anywhere in that breaker box, you have permission to go short. Now we have this fair value gap that's sitting right here. So price can come up to ideally no higher than the consequent encroachment because we have a balanced price range right here. We have a BPR. We have a fair value gap, a wick higher towards liquidity, and then we blew through that and we balanced this area right here. So no reason for price to go higher, but we did go higher right here and we tapped this fair value gap within the breaker. And that's why I got in right there, guys. I mean, I'll put on my executions if you weren't here for the trade. That's my executions. So I got in on the actual candle before the move. I mean, it just looked too stinking good, guys. I mean, it's just too good. Wow. I love when that happens. mean, before I would get in here and then I'd have to weather this up and down, and questioning, is this gonna move? But I waited, and then it's just like, man, this is just too good. I don't see why it would want to go higher. It has to go lower. Boom, and distribution, 10 handles, target this low, in and out for a quick scalp. That was the play today. So I'm done for today. I don't want to take any more trades. I hit my target. I made $200, and that is then copied on 3 other accounts. So I had one earlier trade that I actually took a loss on right here. And it was just on one account. So let's see what my numbers are for today. You won't see it because it's not up. It's not one of the screens that show. So I have one screen. I have one that copies. I have an account that is an eval account that I have that 3 times the leverage. So that made $620. And then I have 2 other accounts that both made $200. And then the account that I traded on right here, I'm up $50 because I took this loss right here. It was a momentum trade, and I didn't want to. There just wasn't high conviction, and it did work out, but I explained why I got out. So, green on the day. That makes me happy, man. That is a win. That is a win. You still, Audibuzz, you still in that short? We just hit discount right now. We definitely have room to move lower. Look at that. Isn't that how price? Isn't that funny? I've been trading ICT concepts for a year. I will get to the point where I'll hold for these bigger runs. I'm just not there yet. I want to take my profits and I want to get out. I'm happy. I don't need to stress over trying to make more. I could do more contracts. I could do 2 contracts instead of 1, and I could have sold 1 there. And that's, we have a nice run right here. Yeah, price is moving, baby. Honey Roy, future broker that I use Trade-of-8. Trade-of-8 is so I have a cash account there, and then I have some eval accounts that I trade right there. There's a couple other ones that you could use. Ninja Trader you could use, but Trade-of-8 had decent commissions. I think they're 35 cents for micros, and then $1.39 for minis. So my total commissions on this trade were roughly $3. I paid $3 to take and make $200 per account. So, I mean, I'm okay with that. You just don't want to lose money. All right, you see that big retracement? Look where it retraced to, and it wouldn't surprise me if it's right here. So see these 2 down candles on the 1 minute? Price will usually come back up to those levels and mitigate. Let's see how close we came to it. There we are. Doesn't have to come all the way back up to it, but it's very common that you see price after it runs swing lows, it will come back up close to them and mitigate them. It could even still push higher. It could go all the way up to, let's get rid of some of these lines here. But if it's in a hurry, it's not going to. I mean, I don't know why it would be in hurry. It's still before 2 o'clock. You can see right here, you have a higher time frame. Look at this. We got a high on the 5-minute. We have a high, low, higher high on the 5-minute. So you could see price taking the lowest closed body. You can see price come up to right there. And you could see it turn right there. This is why, I mean, retail traders will look at this and they'll say, oh, it's going to come and stop here. Yeah, but they don't know why. Because we have this high, low, and higher high. All the people that got in longs here at this low that went higher and thought it was going to go higher are now stuck. They're trapped traders down here. So what will happen is price will come back up here, hit this level, and then all these smart money traders will all these big players will mitigate their losses here and get out of the trade. So it's common that you'll see that happen. But if price is in a hurry to move lower, then it's just gonna skip that altogether. Just hit 3R, nice. Good trade. Yeah, I'll get better at holding longer trades. Let's see, what was my risk to reward from what I had right here? I went short right around there. And I put my stop right there. My target was, where was the close? Yeah, right there. So that was 2.5, almost 2.5 R on that trade where I had my stop, because I only had a 5-point stop loss, about a 5-point stop loss. Overall good, but I mean, ideally, typically I do a 1-to-1. So that would have been my stop. I wanted a tight stop in case that it sprung higher on me because we were so close to the highs, and it could have very easily just exploded higher. 2.25. Yeah, I'm not so much into high RR trading because honestly, I'm looking for my setup, and right now I'm actually taking all of these trades. I'll put it in an Excel sheet and I'll run it, and I'm beginning to notice a pattern that when you are on the right side of the move on these breakers, these easily trade 30 handles. And I just don't have enough data to give me the conviction yet to just hold no matter what. But this trade idea right here is very, very doable, especially if you're on the right side and it's the right time. It wasn't the right time for me. If this time right here was 145, after 145, between 145 and 215, I would have had more conviction to potentially hold to these lows. And if I had an extra contract, I would have held to probably here, because I'm tracking every single breaker from every day, and I'm basically identifying how far are they running? Are they getting stopped out? And typically a 10 handle stop loss is enough. A breaker is an ICT entry model. So ICT tells you how to read price, whether it's going up or down, and that means it hit a high. The breaker is a specific model. There's a few things that a breaker requires. A breaker requires a high, and then a swing low, and then a higher high that runs liquidity. So boom, right there, there's the liquidity. It grabbed the liquidity or buy stops that are sitting above these highs, and then price reversed. As soon as price reverses, Honeyroy, and breaks below the swing low that we marked out, which was right here, you now have this candle, this down closed, the last and lowest down closed candle turns into a breaker. It's called a breaker block. And when price comes into that breaker, look how all these candles stayed below the consequent encroachment of that breaker. If we find the middle of this candle, look how price stayed on the lower half. That means price was heavy. It stayed below on the lower half of this breaker, and then it moved lower. This is why it's just like, man, it looks too good. I got to get in. I got in and it moved lower. Breakers is a signature of a reversal pattern. It's a reversal pattern after it runs liquidity, and typically your stops can be very, very tight. I don't have to put my stop up here. You don't have to do it. Especially if your breaker is a lot smaller, typically your stop is a close above the breaker bar. So it would have been roughly right there, and that's why I had it just above in case we wick above it. So that's a breaker. Yeah, the breaker is the whole candle. Ideally, when I track all my data, I'm tracking the low of the candle, the open of the candle, and the consequent encroachment of the candle. And those are ideally, I want it to stay below those three things, or allow it to come up to that point. And I don't want to see it to fill in the full breaker bar, because if it fills it in, it tells me it might not be as bearish, but it's still allowable. But when it stays on the bottom half of the breaker, it just tells me that price is heavy and price wants to move lower. And it's the model that I just really, really like, and I've just seen it play out so many times. So that's the model that I trade. I only trade that model, and then the play right here that I had is an inversion model, where you have a fair value gap, and then it breaks above that fair value gap, and then you target the next high, which it did do it. I just got out because I had my stop here, because I just didn't want to. Wasn't following my rules on letting it play out. All right. Let's see. I'll stay on probably for another 15 minutes to the end of this macro, and then I'll probably be done for the day. Get some other stuff done. That would be really nice. So look what we did here. We just ran this low right here. This last low. So these lows right here. We didn't run this one. It left it, so it could come back to it later. I would like to see how this plays out right now. I would love to see this come back up to I would love it to come back up to this candle, this area right here. Let's see where it sits. Let's put a Fibonacci retracement tool. Let's find out where equilibrium is. Equilibrium. So look at that. That's perfect. I like that a lot. So if I'm going to go short again, what do I want? I want price to be in premium if I'm going to go short. I want price to come up above the 50%, because everything above 50% of this high to low is in premium. This is premium. This is discount. I want to see price come up into this area. And guess what's in that area? This breaker. So that's really attractive to me for a potential short, another breaker short. So that would be a breaker idea. It's obviously not guaranteed, but it absolutely could happen. Do you wait for a close below the breaker? I wait for a close below the swing low. So let me zoom in, because there's two things here. On this box is the breaker, but this is the swing low. That's the market. When price comes below this line right there, that is a market structure shift. That is the signature in price that price wants to move lower. Sometimes that is also the breaker, but not all the time. The breaker is the lowest closed down closed candle. In this case, there's only one candle here. In this case, if you were to look at this as the breaker, it would have been this candle right here. This would have been the breaker if you would have saw high, low, higher, high. But I chose this one because there was a fair value gap to the left of it. This fair value gap, I like when breakers form as a result of the fair value gap. This also would have worked because look how price respected. I mean, it even respected even more. Look at the close of this candle. Or the close of this candle is, you can see it right here. It's really small text. So 55.00. And look at the open of this candle. Open is 55.75. Close 55.0. Open 55 even. So we came very, very close to these. Did I get that right? Open 55 and then close 55. Oh, I'm sorry. It's exact. This is exact. So this was the actual signature breaker that the algorithm was watching. I used this one here, which you could have used either one. Both work out. But to answer your question, the swing low, a swing low is made when you have a low, a lower low, and then a higher low, making a swing low. So here's a low, low, higher low, swing low. When price breaks below that, I now wait for price to come back up into the breaker. This was the breaker that the signature in price was watching. I mean, and it hit this beautifully. Look at that. Look how many times it hit it. Oh man, I love going back and seeing this kind of stuff. Look at this. Price comes lower, breaks it. It taps the high of this candle. What is it? 55.00. Comes lower. Comes back up. What's the high of this candle? 55.00. Comes lower. And what is the close of this candle? Or excuse me, what's the open of this candle? 55.00. Look at that. The signature and price is undeniable. If you don't think the markets are rigged and managed and manipulated by an algorithm, you are at a disadvantage. Understanding that price is moved because of an algorithm, and price and the algorithm has different specific points in time, points and targets it's looking for. Look at that. I mean, 1, 2, 3. Do you think that it just happens to do that and then turns around and go lower right at what we would call a breaker? No. This is rigged, man. Sooner you're able to identify that and realize that, the better off you're going to be. The better off you will be able to begin to read the markets and feel the confidence that price is actually going to move in the other direction, right? If you didn't see this signature and price and you're like, oh, it's supply and demand, well, who's to say that it doesn't go back up here? Why wouldn't it? But if it's ran because of an algorithm and it already grabbed liquidity up here, and now price has done its job moving higher and now wants to move things lower, well, when you see the signature and price based on the algorithm causing it to do that, lining up exactly, man, I mean, to me, it's a no-brainer. Okay, let's see what price is doing. We're still coming up a little bit. I want to see price hit that level. That's what I'm looking for price to do. Look at this fair value gap right here. Look at this green candle. That is a breaker block. I'm just not interested in it because I'm interested in lower prices, but the sooner you're able to identify these all the time, the better you are. We want to see if this closes above it. We don't want this candle to close below this box. If we do, that tells me we're really heavy and we're moving lower. But if we are able to stay in this box and then inverse this fair value gap right here, that would be a good move, potentially targeting the 50% mark of this run. Because price will want to run up into premium, and right above in premium is that breaker, and then potentially move lower later. Maybe in the final hour of trading. But like I said, it's a no news day, so price doesn't have to follow the rules exactly. It can be sloppy. Yeah, there it goes. Let's see if it wick backs up. See, I marked it. I'm not going to take every breaker that shows up. That just doesn't. That's just not the way you should trade. You don't trade on patterns. You trade it based on liquidity. And while that is a breaker, and we do have a potential idea, price may not have that same idea. Looks like price is really heavy and wants to move lower. Now, look at this that shows up here. Now, I would never trade this because it's just too big of a candle. If price goes below this box, this candle here turns into a breaker. We got a high, low, higher, high, and then it can move lower right here. But that this is what you do when you start reading price, is you identify things before they happen, and when they play out, it gives you the confidence to actually take the trade. But I don't think that's going to happen. I think price is going to want to work its way back up here. This is the 15-minute chart. So we could spend 5 more minutes down here, and then we could push higher and fill this 15-minute fair value gap. What does the 1 hour look like? Yeah, that'd be really interesting. So here is a BPR on the 1 hour time frame. And why is it a BPR? Well, we grabbed liquidity, we balanced a 1 hour fair value gap, and we had a giant candle go higher and a mirror image of that candle going down. Now, if this candle comes back up and touches this line right here, which is that breaker that I pointed out, it would, and then goes the other direction, that would be an immediate rebalance on the 1 hour time frame. And an immediate rebalance is a very strong algorithmic signature in price for an aggressive move lower. So if this candle comes up and touches it and then comes back down and moves below here, more than likely the last hour of trading is going to be aggressive, and we could see a big push lower in that last hour of trading. But obviously all that has to play out to see if it actually is the case. It may not be the case, because I've said over and over, I think I've said it 100 times, it's a no news day. I just don't expect a lot on no news days. But I would love to see that happen. Immediate rebalance on the 1 hour. Come up, touch this breaker on the 1 minute, and see a reversal pattern in the final hour of trading? Because right now it's 212. Yeah. If you've liked what you've seen or you like it, feel free to give a like. Today's my first trading live stream. I'll probably do more of these. I've been wanting to teach and educate people. So this is the first one I've ever done. If you like it and want to come back for another one, give me a like. I'd appreciate it. To be honest, I'm kind of interested to see if price actually does this. Might actually stay on a little bit. Appreciate it, Honey Roy. I appreciate it. I like that how price does that, man. Just out of nowhere, boom, price moves. That's a macro. That's what price gives instructions. It hits liquidity and then price moves very quickly to the other side. It does that all the time. And then after it hits that, it just goes sideways. Constantly. Sideways until the next set of instructions are given to the algorithm to move price. Now ICT says that the end price and starting price are already decided before the day ends. So obviously you have a starting price, but it already knows where it's going to end the day. That's how he talks about the algorithm. So price will then fluctuate, generate liquidity throughout the day, and end at the level that it intended at the beginning of the day. So again, ICT looks at it as everything is rigged, everything is algorithmic, it's decided, it's intentional, it's not based on supply and demand. And the longer I've watched price move in such an algorithmic way, honestly, the more I believe it, the more I see it happening, and I'm convinced. I mean, why would supply and demand just want to move price higher right here and then hit these equal highs? If there's so many retail traders out there that are constantly being taught that equal highs means resistance, if a majority of people are doing that and it's truly resistance and most retail people are putting stops there and it's going lower, why doesn't it do it? It doesn't do it because it is designed to take those stops. That's how the algorithm generates liquidity for these large banks, for these traders that I mean, you go to any banker. Bankers are going to say the best way to trade is to trade the stops. When price is running up, you're going short. That's exactly what these big banks do. Price moves there. The algorithm is designed to create the liquidity, and then it wants to move lower. And then after it does its set of instructions, then it moves sideways to generate more liquidity. Thanks, Roy, for hanging out, man. Appreciate it. But you see that happen all the time. I see it happen over and over again, where at some point you got to ask yourself, why does price always run above equal highs? Go back and backtest. Go look at in your own charts. Look and see how often you see price just wick above a level like this. Let me get closer. How it wicks above these levels like this and then changes direction. Why does it do that? It's because it's there to generate liquidity. It wants to generate liquidity, and then it moves to the opposing liquidity. Sometimes it's imbalances, other times it's liquidity. So what I mean by that, look at this right here. Look at on the 5 minute, it's a better example. We ran these equal highs here. There's that wick. There's the wick right there. You can see it. But we came back down on the hourly. Did we go below that? Did we go below this low, this candle's low? No, we didn't. So we didn't grab the opposing side's liquidity yet. It's going to go back, find some imbalances, deliver price efficiently, and then there's a good chance that we're just going to blow right through this low and then move towards this low on the day. I mean, that could be the set of instructions that it was given. And I told you before, I was short. If you weren't here, my bias for the day was short. And this is turning out to be a market maker sell model. So we have our initial consolidation, we have our accumulation, and then reaccumulation right here. And then price moves high, it grabs the liquidity, consolidates at the high, and then we run lower. Now that we hit these lows, well, we just made a new lower low. It looks like price is going to run lower, and it's going to target at least this low here and potentially this lower low. Ideally, I would like to see the lower low taken. But it doesn't have to happen today. It could happen in after hours too. It could happen in the last 10 minutes of trading. For those of you joining, these were the two trades that I took today. This one was a loss. I just did one contract on a non-copied account because it was over the lunch hour. Thought price may want to hit these equal highs sooner or hit this high sooner. Well, it did work out. I just had a really tight stop loss because I didn't have strong conviction of it. And then I took this short, which was my signature model, which is a breaker. This is a bearish breaker where price came up into it, into this pink line, and then it went short. And I got in right there and then sold right there. I'll be right back, guys. I got my wife calling me. I'll be right back. Honestly, I don't know why I have these headphones on. I was going to put something on my phone so I could listen to it, but I decided to put it on the big screen. Oh. Oh my gosh. That felt amazing. All right, see how price is stair-stepping down right now? It's because it's not within a macro. It's between macros right now. The next macro is going to be around 245. That's where it potentially could get its next set of instructions and move price. Could it do it before? Absolutely. You just can't always assume you got it all figured out. Price, the markets can do whatever they want. That's why you got stop losses. All right, so let's see. We made a lower low. Let's bring that lower. Look at this. So I have this from this high to this low. I put a Fibonacci retracement tool. And I always am looking for where is equilibrium? Where's the midpoint of the range? So from this leg of price action, we have this 50%. This is the exact middle of that leg. Look where it's at. I look at this stuff all the time because it just works. It's right above this giant bearish order block and right above this fair value gap that's sitting right here, and that's on the 1 minute. If I go to the 2 minute, probably looks even better. On the 2 minute, it's in this fair value gap that's sitting right here. On the 3 minute, again, it's in another fair value gap on the 3 minute. Ooh, look at that. On the 5 minute, it looks beautiful. Look at the 5 minute. Look at this. Now I'm going to do this. This is the kind of stuff you're looking for, because while it always doesn't pan out this way, many times it will. Look where the consequent encroachment is and the 50% mark is. Look how close they are. I like to see overlapping PD arrays, overlapping signatures in price that tell me if price is going to, it doesn't have to, but if price is going to come back up here, this is a potential area we could see price stop. Why? 50% of this fair value gap on the 5 minute. We have the 50% mark of this entire range, but also look at this blue box. This blue box is the 1 hour fair value gap from a while ago. And look at the low. Sometimes price will come up and just touch the low of a higher time frame fair value gap and then move lower. Obviously, looks like price is just way too heavy. It doesn't look like that's going to happen, but I mean, obviously it could. But we're targeting, we want to see price come and target these lows. That right there, my friends, I think is the target for the day. That's where I think price wants to go. And look at this. Oh man, I love it, man. This is so cool. If look at this. Look at this blue line here. That blue line is the new week opening gap low. If I'm going to scroll back, look at this right here. Look at this candle's low, close, and look at this candle's open. Right here, look at right here on the charts. You can see it. Here it says Friday. Here it says Sunday. This is the close of the previous week, and this is the open of the next week. The close is where the new week opening gap line goes, and the open is where the new week opening gap. Price will reference this weeks in advance. 1 to 2, sometimes 3 weeks. So I have several of these on here. This is from April 14th, and we're almost 30 days out. We're 2.5 weeks in, and look at where that sell side liquidity is at. Look how price came down. It touched the new week opening gap line and then moved higher. And now so our target is sitting right on that line, man. That tells me there's a high probability. May not be today, but there's a high probability that price is going to move and run that liquidity. I would love to see it today. That would just build my confidence that I'm reading price correctly. You see price run down to this level and take that liquidity. It could run past it, but this is the target. This is, as a trader going short up here where I took this short, having all these things figured out, you could have targeted this and left a runner. Now, I didn't because there's no news today, and I'm not in a position to risk that much, and I want to make small wins, and I want to build my confidence that way. But you'll see that this is a great target. So there's a high probability we hit this today over the Asia session, London session, or maybe tomorrow in the New York session. They may leave it for the news that's going to start coming up on Thursday and Friday. If you're just joining, tell me where you're watching from. I'm here in Nebraska. Probably many people have never been here before. All right, what do we have here? Okay, so we took this lower low right there. And then look, this is another signature in price that happens quite often. After price runs a level of liquidity, look left and find out where the next fair value gap is. So we got this fair value gap, and then we also have a very tiny breaker. Nothing of major significance. I wouldn't put much weight into it, but it's right there. So we have a high, low, So we have a low, a high, and a lower low. So this candle right there would be the breaker. Let's just see. I'm curious to see if that lines up with anything. Right there. So we have not reached that. We actually stayed above the consequent encroachment of that fair value gap. So it's pretty common that you'll see some type of swing low, and then if you look left, if there's a fair value gap, you don't necessarily put your take profit. Like if I was in this trade from up here and I'm targeting this swing low, you honestly would want to put your take profit, if you have your final one, you want to take it here. But if you are expecting it to move lower, you target this fair value gap, because very often price will reach down into a fair value gap to rebalance an area. Look at that. It tapped the new week opening gap high. Why there? Obviously, it could just blow right through it. But it stops within a tick or two, and then we'll see. I don't put much weight. It's just nice to see these things happen because it reaffirms that there's an agenda behind these charts. Minute mitigation block breaker. If you guys want to see another breaker, what was this? This was from Tuesday. Oh man, I wasn't on this morning, but I would have took this. This is a great example of my model. Price is consolidating. We make a low, we make a high, and then we make a lower low. Before here, right here, my target would have been this fair value gap sitting right here. This hourly fair value gap. I would have expected price to reach up into this level. That would have been my target. So when price breaks below this level right here, I'm now looking for longs. When price breaks below this level, I'm looking for a long. Well, what do we got? We have a low, a high, and a lower low. This is the breaker model, and this candle right here is the breaker. And look what price does. Price comes up above this box, above the breaker, creating a market structure shift. We hit this fair value gap, and then it goes down hard. They want to convince people that it's going short. They want to convince people price is moving lower. But what price will do is then it will stop. So it stops in this breaker. There's a little slippage. That's common on no news days. But price then reverses and changes directions. I would have smacked this sucker. Oh my gosh, that would have been beautiful. And look at the time. It was right at 8:30. This is the news candle. There's usually news at 8:30, so 8:30 is a main point. But look at this. If I did a 10-point stop loss and I targeted the swing high right there, that would have been 24 handles. And I don't even know if I would have sold, because look at the momentum on this. You could have targeted the next one. 38 handles. And look at the drawdown. Less than a handle. Man, this is why I love this model. Your risk can be so low. Even with a 10-point stop loss, that's a 3.8 trade right there. So if you're interested in learning about the breaker model, that is what I primarily will teach. I teach ICT concepts. I help you understand how to read price. But the model that I look for day after day after day is this bad boy. It's just so good, man. I mean, this is beautiful. We grab liquidity. We shoot up the other direction. We come back down trying to get people into going short or getting out of their long positions so that they don't go on this move, and then it just explodes higher. Amazing. I love it. This is what I trade. All right, since I didn't get off at 115 and we're close to the next macro, I'll hang out and I'm going to watch, see what happens with price. Oh, look at that on the 1 minute. That's nice. We grab liquidity. We bounced here. This could go. Oh, this would be a demo trade. I'm gonna log out. I so want to take that, but I need to get out. So we're gonna do a paper trade because I am done trading for the day. I would go long right here. Let's see what happens. This is why I'm doing a paper trade, because I've lost my money before. I made money and then I ended up losing it. So target would be this swing high. The close below here would be the stop loss. So any close below, let me make this. This is that was a 5-minute fair value gap. Oh yeah, look at that bad boy. That might take off. So why did I get in there? It's not a breaker. This is an inversion. This is an inversion model. This is the other model that I trade. I don't do as much of it, but I do it. Let's see what happens. A close below this means I would get out. There's 28 seconds left. But I like this. If I didn't have that trade before, I would be in this. All right, so we tap this fair value gap here. Now I want to see it push the other way real fast. All right, so we did not close below it. Do you see that? We did not close below this fair value gap. So price could come down here and still go up, and I would still be in this trade. Now I do expect lower prices and some other reason why I didn't get it, but we also ran liquidity and we hit a fair value gap, and we are respecting approximately this 5-minute fair value gap consequent encroachment. So it's not uncommon to see price move the other direction, and that's what we're seeing right now. Honestly, you could probably target even higher. You could target these swing highs right here. You could target these swing highs and it should probably run. Hey, this is a paper account, so let's just see what it does. Let's see if it actually runs for it. 137 points. Let's not go for that one. Let's go for the one beneath it. See, I wouldn't do this on my live account. I mean, I would not stretch this out because that would just be too much emotional toil. I don't know if I could handle it. But we have a fair value gap that was also, or a bullish order block that was also created. So it's okay to see price come back down here and touch this and then push higher. It doesn't scare me that price is coming back down. Tapped the fair value gap again and didn't quite touch the bullish order block, which is sitting right here, but now we're moving higher. See this? See, we ran liquidity, we have a fair value gap, we're inching lower, and then we have this bullish green candle and it closed above this fair value gap. That's just bullish signature and price that it's hard to ignore. If this was my cash account, I would be, or if this was my live account, I'd be looking to take some off right here, and then I would be moving my stop to break even right there as well. We're bullish, we're bearish on the day. Remember that. So you can't go for these long runs. My bearish, I'm expecting price to go down here. If I'm expecting price to move down here, and I'm doing a long, you gotta be extra cautious on your entries and not try to go for such a long run. I mean, let's just do this. I'm curious here. Let's go from this swing high to this swing low. This is the 50% mark. We could turn right after we grab this liquidity. We don't even have to grab that liquidity, and it could turn the other direction. I think it wants to go higher, but based on just premium and discount, it doesn't have to. So we could turn right here and it could go the other direction. Let's see what happens. I want to see it push higher. So this swing high we are going to hit. We should hit. There it is. Now you either are taking profit there or you're moving your stop to break even. So now I'm going to move my stop to just above break even. I'm not going to take, actually I could take, let's take a couple, let's take 5 off. Let's do it how I would want to manage the trade. So let's take 5 off right there. Well, I did that wrong. Let's take 5 off. So I took 5 off right here. And I have 20 contracts left. Stop, I want to be at break even. See how we wicked above it and we are not pushing higher? We could still go higher for sure. But that's what I'm saying. I mean, the bias on the day is short. I mean, I'm convinced on that. So how high do you think price could go before it just wants to turn the other way? I mean, if it's really heavy, it could turn right now. If it's really heavy, because we hit premium, we grab liquidity, and now it could just run the other way. If it does that, that's exactly what, that would just be insane. But when you look at a higher time frame, the reason why I have this is we have a higher time frame, and the higher time frame, let's see, actually let's move this down to lower. The higher time frame now, because with the lower low, is sitting right above this high. What is this fair value? What is this? I don't know what that is. This is where I practice holding my longer runs. Not doing that with live accounts yet. I'll get there. I'll get there. I'll get there. It's so much easier to hold fake money, man. Now, I know probably some of you are thinking like, dude, if you were in that with your live account, you would have been making some money. I would have said that not even 6 months ago. Probably not even 4 months ago. I just am learning that I have to be content with the win that I have and then walk away. Now, if I see a breaker set up, I might take that. So here's our low, high, lower, low. This is the breaker right here. We did break that high. We're sitting in the breaker right now. But that's a large breaker. And it's going against my bias. So I wouldn't take it. I don't want to take that. Not even gonna leave that up there. Robert, Houston, Texas. Been to Houston a couple times. Man, I don't know how I'm in Omaha, Nebraska. Small town, man, compared to Houston, Texas. I mean, what is it, the first, second, or third largest city in the nation? Chicago, Houston, and New York? Is that the three? So right now we're in the macro. We're in the one. We're at 248 is the time. Price is looking strong here. So I expect we're probably going to see next target would be this swing high and then this swing high. We have 0 fair value gaps in this whole range. That's a good sign. That tends to mean it's a low level liquidity run, which means really low resistance, and you could see a really big candle to go very quickly. That's going to do two things. It's going to entice buyers to get in thinking that it's going to go long, and all of this, any stops that are sitting above these swing highs for people that were going short are going to be ran. So there's incentive for price to shoot up higher really quickly. It doesn't mean it has to, but it could. And that's why it would do it if it was. I'm going to hang on to this trade until I break even or we hit that swing high. That'll be my target. I'm going to grab a granola bar. I will be right back. I like that. That hard push down tells me we're going to go higher. Look at how aggressive that is. Yeah, we're probably going to target potentially these highs here. For sure, this swing high. And I'll probably take off another 5 contracts just to manage this correctly, because it could turn at any time. And who wants to hold for a whole thing and not get anything, or take partials along the way? That's why you take partials. Houston's the 4th largest. Top biggest cities in U.S. New York, Chicago, Dallas. Oh, no. It's number 2. New York has 8 million. Houston has... Wait. Los Angeles has 3.9, and then Houston has 2.3. Oh, Chicago's 2.7. Why is that not in order? Okay, so it goes New York, Los Angeles, Chicago, Houston. Number 4. That's a lot of people, man. And I'm guessing that's proper, like Houston proper, not the surrounding areas. I'm sure that makes it much larger. Honey Roy, we're in a demo long right now. I closed my account, but we're in a long for an inverse that happened, targeting these swing highs. Oh my gosh, we're gonna stop out. All right, there's the stop out. This tells me we're heavy. We just inversed this fair value gap right here. And quite frankly, I had a really tight stop. I just wouldn't want to lose anything. Thanks, Raul. I appreciate it, man. I'm glad you like this. I wish you did. It's really hard to do. It's really hard to commentary, to give my thoughts on his videos when they're 4 freaking hours long, man. They're just so stinking long. Alright, so we're still in the macro. Let's just see how this plays out. It might have just come back down for just grab liquidity and then move higher. It does that all the time. It moves, it wants to move higher, but before it does, it's going to grab liquidity, and then push higher. But we're also, like I said, my target is the sell side liquidity sitting right here. That's what I would want to see happen, because we're in a market maker sell model. So the retracement, I'm thinking, yeah, we could see go all the way up here, but we may not. If it crosses this fair value gap, that would be a sign right here. If we close above that, we'll take out these highs and potentially this high right here. All right, so we close below it. So you wouldn't want to do anything. The idea of it going higher is not gone. It's just I'm not putting real money on it because we're on a no news day, and I already made my money for the day. All right, if we 6 seconds, if we close here, this would, the high probability will swing, we'll hit these highs. All right, I'm gonna just do a demo long there. Just to target this swing high. We grab liquidity down here. Let's see if it hits it. Yeah, that's gonna happen 9 times out of 10. That's why I took that lunch hour one way up here. That's why I took that one. The mistake I made is we're in consolidation. We're in consolidation, and I thought, oh man, it's 12 o'clock. It's a macro. We at least have to hit this high. Maybe this high, maybe that high. We did. We just retraced too far for me to want to stay in, and I was in way up here, and my drawdown was 10 handles, and that's where my stop loss is, so I wanted to respect that stop loss. Look at that. Look at that retracement. This is why you take it right out the high. That would have freaked people out and somebody would have got out of that trade. Could we still go higher? Yes, but the model that I trade for my inverse is based on Ryan Daji D. He has a YouTube channel. Check him out. But his model is inversion models. That's the only thing he trades, and so I learned that from him. Good content. But he once you hit a swing high, you take a partial and then you put your stop to break even. So you would have been stopped out on this candle if you didn't do anything. All right, 50 seconds till 2 o'clock, 3 o'clock. And for those that have been on it for some time today, I normally will be trading in the morning. If I do a live stream, it's going to be morning, the AM session. That's my preferred time. But depending on if it's choppy or not, then I'll look at the afternoon. But just FYI. Let's see what happens right here. 2 o'clock. Grab this liquidity and either push higher or reverse. There we go. All right, I should push higher right here. Just grab the buy side right here. That could be enough for it to turn. It's doing nothing. Probably reversing right here. The lack of momentum tells me that there's a high probability we could just reverse. Well, guys, thanks for coming on. This is my very first live stream, so thanks for joining me. Plan on doing some more of these. If you like the video, give me a like, consider subscribing. Appreciate it, guys. I'm gonna probably head out here, and I'll probably be on tomorrow morning, sometime around 8:30 Central Standard, 8 o'clock Central Standard Time. So that'd be about, what is that? 9:30, about 9. That'd been 9 o'clock New York time. So I only trade the NASDAQ, Honey Roy. That's all I trade. I don't like having to find what I want to trade. I don't like that part. I like to sit down, know what I'm looking at, and then just wait for my setup. Less stressful. So, I'm going to head out. Thanks for being here. I appreciate it, guys. I'll be here tomorrow. Maybe. I haven't figured out exactly how I want to do it, but I appreciate you guys being here. thanks, and we'll see you later.